Welcome back to Africa Trade Unlocked, our special podcast series in partnership with Absa Corporate and Investment Bank. I am Francois Fouché from the Center for African Management and Markets at GIBS here in Johannesburg, South Africa. And in our previous episodes, we established a foundational understanding of the new African Continental Free Trade Area, and we've explored its far-reaching opportunities beyond import tariffs and highlighted the strategic role of financial hubs like Mauritius. Today, in our third episode in this series, we talk about balancing gains and pains, and we're shifting our focus to on-the-ground realities of implementation of the new trade deal on the continent. This includes addressing crucial concerns like the potential impact on government revenues, ensuring the vital inclusion of small and medium-sized enterprises, so-called SMEs, and ultimately securing sustainable gains for all. The vision of a truly integrated African market is powerful, but navigating the practical challenges requires foresight and strategic partnerships. I'm delighted to be joined today by Irene Kabiri, a corporate banking director at Absa CIB, based in Uganda. Irene, thank you very much for joining us.
Thank you, Francois. It's a pleasure being part of this important discussion, especially from an East African perspective, where we're engaged in a number of businesses that are navigating the AfCFTA issues.
Irene, let's start with a common concern. So a significant aspect of the new CFTA is the reduction in import tariffs. And this naturally raises questions about the potential short-term impact on government customs revenue. Now, from a Ugandan perspective, how is this challenge being perceived and discussed? And I think more practically, for businesses operating in Uganda, how might these fiscal adjustments influence the local business environment, or government priorities, perhaps? And are there ways that Absa is helping clients to anticipate these shifts, Irene?
Well, first of all, that is a very pertinent concern. And, for most of the African nations, including Uganda, customs duties really form a substantial part of the government revenues. And a number of African economies at this point in time are really looking at raising a lot of these revenues internally as opposed to relying on external factors. So for all these economies, raising or revenues are extremely important, and doing away with a portion of these revenues becomes critical to them. So in Uganda, historically, customs taxes has contributed close to 40% of the total tax collections. So this is a significant part if the country has to consider potential loss of this revenue arising from the tariff reductions under the AfCFTA, which is really a real consideration. So when I look at the discussions that are going on in Uganda, I think they're skewed more towards trade facilitation measures and how do we improve and simplify the way we do business. The emphasis comes in around simplifying custom procedures and reducing the red tape, around how businesses are conducted. More often when there are a lot of trucks that get to the borders of these countries, you will see and notice that there are long queues or waiting to be cleared. Some of these trucks are at these borders for 3 to 5 days, and all that is lost revenue, all that is lost time. When you look at the documentation that really goes on at the borders of these countries, again, that is something that can be relooked in order to facilitate better revenues. Recently, the East African markets have gone through their budget cycles, and we did host, as Absa Bank, we did host a budget session where we're able to break down to businesses what the fiscal changes mean and how they can operate better and basically place themselves ready to address some of these costs that are coming out from the changes in the budget.
Yeah, thank you for that.
Thank
I
you.
think that proactive advisory is incredibly valuable. But if we think beyond national strategies to manage revenue impacts, how do you think can businesses in Uganda perhaps proactively adapt their own financial and operational strategies to thrive in the lower tariff, higher competition AfCFTA environment? And I think more importantly is what sort of advice or financial tools does Absa Uganda offer to help businesses, particularly small and medium-sized enterprises, to become more competitive and efficient in this new landscape?
Well, in this lower tariff, higher competition environment, businesses must really focus on a number of issues. But I will highlight maybe three of the most important issues. One is that they must focus on efficiency, specialization, and then value addition. So the situation, what we see in Uganda, this means that a lot of these companies need to invest in technology to improve production processes that enhance quality and to be able to meet regional standards. And also, very key to this is really streamlining the supply chains, because these are critical in ensuring that these businesses have continuity, these businesses can compete in the region, and that these businesses are able to withstand, whatever shocks that come with the competition of opening up the trade across the continent. Um, the other thing that we have done as Absa Uganda is to make sure that, there is access to funds or access to financing to most of these SMEs. And a lot of these SMEs usually find challenges because of their credit profiles. But we have come out with very innovative solutions on how to support these businesses and how we should structure our loans in order to meet the capital expenditures and enable these SMEs invest in new machinery, technology, or capacity expansion as they would like.
Thank you, Irene. So that comprehensive support for the small and medium-sized enterprises, I think, is really critical. They are really the backbone of most African economies, and their successful integration into the CFTA is paramount for its success. Uganda is also part of the EAC, the East African Community, which already has its own integration agenda, and it includes a customs union and a common market. But how does this new continental trade deal build upon, or perhaps even complicate that? I think what specific opportunities or challenges does Absa Uganda foresee for its clients as they navigate these overlapping trade and regional economic community agreements?
Francois, this is a very, very fascinating aspect of this trade, because when you look at East Africa as a whole, and recently East Africa does not just comprise of Uganda, Kenya, and Tanzania. We have added onto the list South Sudan, Congo, Rwanda, Burundi. So quite a comprehensive view of the countries or the nations that would consider within the East African community. Definitely, this gives a wider scope in terms of the reach from a population perspective, which definitely presents a lot of trade prospects within the region. So looking at it that way, and also looking at it after and what it poses, definitely the AfCFTA is designed to build on an existing regional economic community like the ESC, never in conflict, but to just build on and make sure that the two really are in sync, and there is no conflict in the East African countries. So the East African community, having advanced its integration already, enjoys significant intra-regional trade. In 2023, the ESC trade alone grew around $12 billion, accounting for around 15% of the ESC's total global merchandise and trade. As I said, when you combine the population across all these East African markets, I mean, it's in excess of, a billion or so, or, close to a billion or so people. And so that creates real opportunities, and which speaks to the number of the that $12 billion that we are talking about. So we help a number of our clients really understand the nuances around tariffs, around customs, around procedures. We support them in terms of providing payment systems across these overlapping agreements, and mainly ensuring that they are compliant and cost efficient. So our expertise on the continent has really exposed us to a number of these agreements and a number of the way these trades operate, and we are able to pass on that to our customers. So looking at this, we do really foresee opportunities, particularly in sectors where Uganda has a comparative advantage, and that's really within agriculture. Agriculture, accounts for 80% of the activities that are carried out in Uganda. So very, very a very pertinent sector for the Ugandan economy, and that really would present a good opportunity for penetration into other markets beyond the East African borders. So, Francois, that is where we come in as Absa Uganda, leveraging on our Pan-African presence. We are able to support the businesses within the East African region to really go beyond the region and look at new markets.
Thank you, Irene. Yeah, it's a complex but exciting layer of integration. This interplay between the regional economic communities and the new CFTA is also a key area of study for us here at GIBS. But I think while Africa integrates global trends like supply chain diversification, digitalization, and sustainability demands, these things continue to evolve. I want to ask you, how do these global forces interact with the CFTA's rollout for a market like Uganda? For instance, are there opportunities for Ugandan businesses to become key links in new regional value chains, perhaps? And can Absa support them in meeting sort of international standards, or perhaps accessing green finance along those lines?
Well, these global trends are certainly shaping the AfCFTA's rollout and and really present significant opportunities across. So the push for supply chain diversification away from single geographies, spurred by the recent global disruptions, means Africa is increasingly seen as a viable alternative for sourcing and also manufacturing. I think with the global trends that we have seen, a number of the Western economies are looking into Africa majorly for raw materials, and we've seen some of them shift some of their manufacturing centers into within East Africa. It's majorly in Kenya, and that really presents diversification of the supply chain opportunities. So the AfCFTA really makes it easier to build a robust intra-African value chain system. And these are very key, especially in the Ugandan context, particularly in agro-processing and light manufacturing. They become critical links in these new regional supply networks. Digitization is accelerating trade efficiency. Again, the Uganda government is really pushing measures to cut off non-tariff barriers, including digitization, customs, and trade procedures, which aligns with the AfCFTA goals. And, at the forefront of these digital platforms and the digital agenda is Absa, to provide a number of solutions from online platforms for trade finance applications and to facilitating a number of digital payments. So when we look at the country, a lot of digitization is on the agenda. Even at the different ministries have gone through this to make sure that there are efficiencies that are built through this digitization um, of the trades across the country.
Yeah, that's a powerful combination of forces, Irene. I think building resilient digital and sustainable value chains is really at the heart of modern trade these days. At GIBS, our research into Africa's emerging value chains and the adoption of digital technologies helps businesses understand where to invest on the continent, and also how to position themselves to meet these evolving global and regional demands. But ultimately, I think the success of the new trade deal will depend on the active participation of businesses of all sizes. For Ugandan enterprises, especially for the SMMEs, what do you think are the most pressing sort of last mile challenges to actually exporting or sourcing under the new CFTA? Be it access, to affordable trade finance, maybe understanding specific market requirements in other African countries, or maybe managing logistics. And along those lines, what tangible support is Absa Uganda providing to bridge these types of gaps, Irene?
Thanks. Well, Uganda's economy really is driven by the SMEs, and rightfully put, the SMEs really account for close maybe to 70% of the businesses in the country. So this is a very pertinent issue, the last mile and the challenges that are around that. And often, these are practical and practical things that evolve around or revolve around knowledge, finance, and logistics. So a number of our SMEs, do have challenges around access to financing, because a number of them struggle with first of all even having proper sets of accounts or financial statements to present to the banks to advance them funds. The other struggle is really around high interest rates and collateral requirements. As you very well know, that banks really do call for security or collateral to be able to advance funds. And most of these SMEs, because of their sizes, may not be able to meet some of these requirements. So cognizant of that, Absa has looked at the market, and being that we have spent considerable time studying this SME market, the number of products that we've come up with to make sure that they speak to these SME cycles, and hence that puts down their costs of borrowing. There are a number of structured products like export loans, invoice financing, pre and post shipment financing, that we are able to structure in form of contract financing that may not necessarily call for the collateral requirements that we normally see banks call for. Lastly, on this, I think is the issue around logistics. It is a very complex. It's a complex dynamic for most of these SMEs. There are complex customs, transportation costs, and border delays. So we work on simplifying trade documentation processes and partner with reputable logistic providers to make sure that we offer integrated solutions. So initiatives like promoting one-stop border posts are crucial, and we do advocate for their efficient operations. Recently, we have partnered with DHL under their Go Trade SME program to enable a number of SMEs access export markets. We now have over 1,000 SMEs benefiting from this program. So we are invested in the SME story, and we are really there to support them and make sure that beyond financing, we are also building their capacity in terms of operations.
Irene, that tangible support is precisely what will make the new CFTA a reality for the thousands of businesses across the continent. It's about empowering them to take those critical first steps And that's a philosophy we share at GIBS, where our research and advisory services are designed to be practical, actionable, and directly supportive of businesses looking to expand into Africa. What a comprehensive and insightful series this has been. Irene, your perspective from Uganda has provided invaluable insights into the practical realities and challenges and immense opportunities of the new CFTA. I think it's clear, that while the journey towards full integration has its hurdles, the commitment from institutions like Absa and the growing entrepreneurial spirit across Africa make the vision of a thriving continental market entirely achievable. So, Irene, thank you so much for joining us and for your invaluable contributions to this discussion.
Thank you, Francois. It's been a privilege.
And to all our listeners, thank you for joining us throughout this Africa Trade Unlocked mini-series. We hope these 3 episodes have provided you with a deeper understanding of the new CFTA, its implications for your business, and the support available to help you thrive in this exciting new era of Africa trade.